Understanding IPSAS 27, a foundational overview. IPSAS 27 is an important accounting standard. It specifically addresses agricultural activities. This standard is part of the International Public Sector Accounting Standards. Public sector entities around the world can use it. It helps them account for their involvement in agriculture. This ensures that financial reports are consistent and clear. The standard provides specific rules for unique agricultural assets. It guides how to report biological transformation. This makes agricultural accounting more precise for government bodies. Understanding its basics is crucial for public finance professionals. The International Public Sector Accounting Standards Board, or IPSASB, issues these standards. The IPSASB works to improve public sector financial reporting. Its goal is to achieve global consistency. This makes it easier to compare financial information across countries. IPSAS 27 is one of many standards aimed at this goal. It focuses on a very specific economic sector. Agriculture has unique characteristics. These characteristics require special accounting treatment. The IPSASB recognized this need. Thus, IPSAS 27 was developed to provide dedicated guidance. The scope of IPSAS 27 is clearly defined. It applies to accounting for biological assets. These are living animals or plants. The core purpose. Why IPSAS 27 matters for agricultural accounting. IPSAS 27 addresses the unique aspects of agricultural activity. Agricultural activities involve biological transformation. This includes growth, degeneration, and reproduction. Traditional accounting struggles with these changes. IPSAS 27 provides a framework for these transformations. It ensures financial statements reflect agricultural realities, enhancing comparability and consistency, essential for effective oversight and resource allocation, improving accountability and transparency in the public sector. Key principle: recognition of biological assets and agricultural produce. Biological assets are living animals or plants, central to IPSAS 27. Examples include sheep, cattle, trees, and cultivated plants. Fish and aquaculture farms are also biological assets. These assets undergo biological transformation. Agricultural produce is the harvested product of these assets. Examples include wool from sheep and crops from fields. Recognize assets if control, future benefits, and measurable value are present. This ensures accurate financial reporting of agricultural resources. Section 4. Valuation Insights. Measurement under IPSAS 27. The initial measurement of biological assets is a crucial aspect of IPSAS 27. As a general rule, biological assets should be measured at fair value less cost to sell. This applies both at the time of initial recognition and at each subsequent reporting date. Fair value reflects the current market assessment of the asset, while costs to sell are the direct cost to get the asset to market. This approach provides relevant information about the asset's worth and reflects changes in value due to growth or market price fluctuations. This is a departure from historical cost accounting for many assets. Fair value is defined as the price that would be received to sell an asset in an orderly transaction between market participants at the measurement date. Section 5. Transparency and Reporting Disclosure Requirements of IPSAS 27. IPSAS 27 mandates several general disclosures designed to provide users with important information. Entities must disclose the aggregate gain or loss arising during the current period, including gains or losses on initial recognition of biological assets and agricultural produce. Furthermore, changes in fair value less cost to sell of biological assets must be shown. A description of each group of biological assets is also required to help users understand the nature of the entity's agricultural holdings. These disclosures enhance the transparency of financial reports. Quantitative disclosures are also a key requirement. Entities must provide a reconciliation of the carrying amounts of biological assets, covering the beginning and end of the reporting period. Section 6. Empowering the Public Sector. Benefits of adopting IPSAS 27. One of the primary benefits of adopting IPSAS 27 is improved financial management. When public sector entities account for agricultural assets at fair value, they gain a better understanding of the current economic worth of these resources. This information is vital for making informed decisions, such as allocating resources among different agricultural programs or identifying underperforming assets or activities. Better data leads to more efficient and effective use of public funds, ultimately benefiting the citizens the entity serves. Adoption of IPSAS 27 significantly enhances accountability. Public sector entities manage resources on behalf of the public, often including valuable agricultural assets. IPSAS 27 requires clear reporting on the performance of these agricultural activities, showing how the value of these assets has changed over time. This makes public sector managers more accountable for their stewardship. Oversight bodies and the public can more easily assess whether these resources are being managed effectively and sustainably, leading to better governance practices within the public sector. Section 7, IPSAS 27 in action: practical examples and concluding thoughts. Consider a government agency managing a large national forest. The trees in this forest are biological assets. Under IPSAS 27, these trees would typically be measured at fair value less cost to sell. Each year, the agency would assess changes in this fair value, which could be due to tree growth or changes in timber prices in the market. Any gains or losses from these changes would be recognized in the agency's surplus or deficit for the period. When trees are felled, they become agricultural produce, and their value at that point is recorded. Another example is a state-owned dairy farm. The dairy cows on the farm are biological assets measured at fair value less cost to sell. The birth of new calves would be an increase in biological assets.